Thank you, Angel, and Heidi ho, everyone. Welcome aboard. Happy hump day to you, no matter where you be on God's green earth, on this Wednesday, the 10th of March. My name's Jeff. I'm coming to you live from Tasmania in Australia, and I'll be joined very shortly by Ash, my trading buddy, who is just getting the late mail for us at the moment. He's lining himself up for the Open of London session, and he'll be talking all things FTSE and equities and cryptos and goodness knows what. He's across most of it. So what I do is trade currencies. That's about it, guys. Although I am starting to educate myself a little bit around some other things, but not in earnest, I've got to say. What I am in earnest of is getting a result out of the pound breakout trade. That would be good. Break even yesterday on that one with this big bar that was part of the range. In fact, it was the entire range yesterday, and we were forced to trade that long. Had you been trading the optimized version, you would have got a winner, but we just got a TP1 here, and then it just crept its way back down, took out our trailing stop, and so be it. Break even trade, as I said. So the optimized version all out here at monthly pivot, and I don't know what that was. It was 1 to 3 or something like that. Long odds on, that's for sure. So it was 60 pip risk. Yeah, about 1 to 3. But, you know, if that keeps on keeping on, then you'll finish up in front. Whether nothing's been working too great lately, that's for sure. Anyway, let's see how we go today. The pivots still hugging each other. There's no real departure from the norm. Well, when I say the norm for the month thus far, where everything's been very close together. So there's been no real breakaway or breakout at this point. Is today the day? Is this tweezer bottom sitting at that support level, form of resistance, the one that's going to propel the pound versus the US dollar skyward? Don't know. Good question. But let's set up the trade anyway. So at the moment, the low of, we're trading my system at the moment, not the optimized version. 1, 2, 3 bars. So we're trading below this candle as the short with our stop loss above it. And this will be the high. So we'll be trading above that with the stop loss below it. So we're just trading the bar here rather than the range. Okay, so let's place the short. The short will be easy. 138.44 will be the entry. 1.3844. The stop loss will be the high of that bar, rounded up. 1.3871 will be the stop loss. 1.3871. And take profit will be half of the risk. The risk in this case is 27 pips. So we'll go 13 as our TP1. That will bring us in at 1.3831. That'll be TP1. 1.3831. And TP2 will be double the risk, which was 21. So it's 42 pips. Underneath there brings us in at 1.3802. That's TP2. Okay, we'll have to wait till this candle closes. We can put in the stop loss, certainly. The stop loss will be underneath that bar. 1.3864 will be the stop loss for the buy. 1.3864. And still waiting for the high, which is only 15 seconds away. Currently, the entry would be at 1.3885, but we have to wait until that candle closes because it may indeed surpass that level, 1.3885 at the moment. Okay, there we go, 1.3885 it is. Stop loss for the long. The entry for the long. which gives us a risk of 21 pips, so a TP1 of 10. So the TP1 will be 1.3895, and TP2 will be double the risk, which will be 42 pips, which will bring us to 42 will be 1.3927. Okay, there are your orders. I better place the long just in case it triggers. Once again, guys, no money, no real money on this. This is micro lot stuff only, if at all. It's more an exercise in finding out what works here rather than anything else. 1.3885 and 1.3864. Okay. There's the long. Short. Sell stop. $1.3844 and stop loss 1.3871, and that's all she wrote. Okie dokie. Now let's put our TP lines in. TP1 for the long is 1.3895, which is there-ish. It's close enough, it's a visual. And the TP1 for the short, 1.3831, which is about there-ish. Near enough. Okay, TP2 for the long is 1.3927, which is about there. A little bit ambitious going through that high. And the TP2 for the short is 1.3802, which is pretty close to there. Okay, all set, ready to go. We'll just wait for an entry now. Yesterday, what did we do yesterday? Oh, well, I've mentioned the pound breakout trade, break even on my system, and a 1 to 3. That doesn't mean you get 3 rewarded for 1. You get 1 rewarded for 3 on the optimized version. Jure, may I know your analysis of Aussie Kiwi and Euro Yen at H1? Sure, no problem. Let's get there very quickly, Jure. So yesterday we traded Kiwi Yen. We were looking for a long here. We got entered here. Our TP1 was pretty much bang on. Where did that get to? TP1 7803. I think we only got to 7804. So our TP1 was pretty much spot on the mark, but trailing stop got hit. So that's as good as it got. And that's just languishing's gone into consolidation. Absolutely nothing doing there. So we're out of that one. Some consideration of replacing that order there, but I don't want to trade into that high. I don't want to trade into that high. I don't want to trade into the pivots either. So I'm not going to do that. There's also a case for trading short, but what candle? Where? I was looking for that to be a bullish bar, a white bar, with a tail about there somewhere. Didn't happen. Had that been the case, I would have placed an order underneath that bar and stop loss just above there. I haven't dismissed it, but I'd need to come back underneath these pivots again and retest them to go short. And I'd want a reasonably small candle to do that because I don't think there's much reward available here in Kiwi Yen. So that one's out. I did place an order this morning on pound Aussie long, if you want to have a look at that one. Morning, Ash. How you doing, bud?
Good morning, mates. Yeah, good. Thank you.
That's the shot. Just going through a couple of things and I will be with you.
Awesome.
So this one this morning I placed on pretty much the same basis. We spoke about this in analysis yesterday, I'm sure, but it did set up coming back off the trade line and putting in a new high. That's important to me that we did put in a new high, barely, but it did. So I'm more than willing to place an order above that candle there. And at the moment, price is kind of on its way there, but really not seriously at the moment. This is just a classic slingshot setup. And as I said, we're coming off a base. We've got a higher high, we've got a higher low, we've got a higher high, we've got a higher low, we've got another higher high, barely, but it's there. And I suppose you could call that a higher low as well. So I'm looking for that to take on this level at least, the top of the range in extension, and probably not much more than that until we get to here. Whether we can do that in one jump is questionable, but that's kind of my favorite level right now. Around about the 188, nearly, yeah, let's call it 189, in that vicinity. I don't know if we can get there in one go. I'd like to see this break, the range break, then come back, and that would be a scale in point. So that one's there. The one was in already, pound Kiwi. We're absolutely doing nothing, guys. Pound Kiwi, Euro pound. I'm looking to go long Euro pound, but yeah, I can't really pick that as a tradable bar at this point. But I'm on alert there. And like I said yesterday, it's probably better that we wait till we get down to here to get that long in. But if we don't take this low out, then that bar there is suggesting to me that this can go at this time. So I'll keep my eye on it very, very closely. Now, Jure, you wanted me to look at Aussie Kiwi, which I haven't got in my chart anymore. I'll get it. And Euro Yen. Okay, no problem. You haven't got anything urgent, mate?
No. I've got a pound trade sitting, waiting. I've got an order in the market, so I'll share that in a minute.
Nowhere near triggering?
No.
Okay. So a quick look at these. Pound yen. First up. Okay, in isolation, I'd find it very difficult to trade that long. That's the weekly chart we're looking at. The interesting part, I suppose, is where is the resistance? And we're just about on it, but we're not there yet. I'll put that line in. That looks to be there to me, or close enough as damn. So I'll come back to the daily chart and zoom in a bit. We are currently 140 pips away from that mark. Now, if we were to trade that, even if we were to trade that on a level, we've got to get it below something, below some support. Let's say it's the weekly pivot. So we've got 1-to-1 there, in my humble opinion, after a very, very prolonged and sustained trend, buying trend. I don't think that's for me, frankly, but if you think there's something left in it, then, and you've got a way to get in, then, you know, I'm not going to argue. It's certainly bullish. There's no question there. Big bearish engulfing bar, a lower high here. Something that looks like that would probably get me interested short, to be honest. But it's a no long, no short for me right now. I don't see an entry on pound yen. Why did I look at pound yen? It was euro yen. Okay. My apologies. It was Aussie Kiwi and pound yen. Righto, let's look at Aussie Kiwi and we'll have a look at pound yen. I need a template here. All right, bigger picture on Aussie Kiwi, and I should know this. I should know it very well, shouldn't I? I've been trading it for a while. I do see something I like there in that little trade line. But when I extrapolate the next one, you'll see that, well, you'll see what I see, maybe, that we're kind of trapped in here. And it's not just the triangle. It's also probably that level there. And maybe that level there might even be a little bit higher. I think we're pretty much range bound here on this pair. Do like the shape of it. Big false break off a resistance level that has proven itself here, 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 here. So I'd want to see this break this level before I look to trade it long, or look to trade it long from the bottom of the range. Don't think I'm ready to trade it right now. Nice little slingshot setup there. Maybe that's what you're seeing, Jure. This approach and pullback. I can totally see that, but
I was looking at that, earlier on, mate, and the Aussie Kiwi on a weekly is what I was looking at. I was looking at the longer term time. Oh, you're on the weekly there, aren't you? Yeah, it's that head and shoulders pattern that interests me.
Yeah, I think I'm more interested down than up.
Yeah, me too. Yeah, me too. Absolutely. I'll be completely with you. I mean, I think it could do with just pushing up again back into that upper zone that you've got on your triangle, and if it did, I think that could be a really interesting trade, because what I quite like about it is if this gets back to the lows of the triangle, then you've got a pretty nice risk to reward ratio, going from the highs, going off the highs as a stop loss. So it'd be a longer term pattern. I don't think I'd trade this on short term timeframes, but on a longer term time frame, it looks like an opportunity to me.
Look, as always, the way that I'd like to play this would be to let price take those, or not even take them out, just break above that level, the trade line, find the resistance, crawl back underneath it. And you see there are all the pivots gathered here, the whole three of them. Come down and take them out, maybe hit that trend line, then give me a lower high in here. That would be very interesting to go short there.
Yeah.
I think that's what I'd like to see, to be frank.
Yeah, that's how you'd maximize it, wouldn't it? You'd take it on a shorter term time frame, but still aim for those lows, I think.
So, yeah, I think we're both of the same opinion, Jure. But, I can totally see the other side of that, again, on a short time frame. If we got up and broke that level and couldn't get back underneath it, then there's probably a bit of upside left. But you'd have to get a pretty skinny entry to make the reward worth the risk, I believe.
So to the upside?
Yeah.
Yeah, I agree. I don't think this is a long, I don't think the long is either either setting up technically, but more importantly, I don't think the risk to reward makes any sense to go long.
Okay, so Giro's saying his focal point not on this time frame, and that's fine, Giro. But I've got to get, before I can comment, I've got to get an idea of where I think price can go and when. So okay, I can see it going back to here, and that gives me a short term, perhaps bullish bias. But gee, we're in a bit of a okay. What's extreme do we hit next? In my opinion, it's tough. It's tough to say whether we're going here first or there first. So that's why I've got to get a good look at that. Now I'll take you back to your time frames, which are H4 and H1, yeah? Yep. So H4. Again, extremely tough to go long here because you've got, if not that level dead ahead. So do you clear that area first, or do you come down here and look, if you're thinking long, you come down here and wait for another scenario? To put some boundaries around this, you're probably looking at there, which has had a bit of a break and retest, or you could swing it up to there, and then you've got this one down here, which is probably irrelevant at the moment.
But that is a problem, isn't it? And this is the problem you got here, is that it could come down to the weekly pivot, and then you could end up being right that this is going up. But that weekly pivot certainly, if you're putting a stop all the way down there to protect your trade, you just got no room to the upside. So the risk to reward just doesn't make any sense to go long here. And that's the problem. It's like, it's not, is the market going up? That's not the only question that you should be asking yourself, because you may well be right on direction, but the question is, what are you risking to get that result? And I suppose you're suggesting that the daily pivots is the the area that you'd put a stop, which then, okay, you've got an argument to say that you've got enough room to the upside, but that weekly pivot is sitting very close to that trend line, and it looks like the most obvious place for a trade to the upside as well.
Again, it's the same thing for me. If we break resistance and retest that area, you've got a reason to think there's a potential long, but you're trading again straight into another resistance level. So, the trade for me is not long, it's short again.
I agree. Yeah.
So it's okay, let price get up to here, then come back underneath, give us a retest, and then you've got reason to think, okay, we're back inside and underneath this resistance area, or this support area, and now becomes resistance. You've got a confluence here. I think that'd be a corker. I don't have a problem with that at all. But I would be very concerned about going long.
Yeah, I'd have to concur.
So H1, can you go short right now? No, I don't see a short either, but it's going to be exactly the same. If I find resistance there, say, and we break resistance, find another resistance area, back underneath the confluence area of daily pivot and trend line, then I've got a reason to go short. So down here, you don't even have to break it. Even if you come back below the daily pivot and retest that confluence area, I think that gives you every right to go short, in my opinion. So that's Aussie Kiwi. What was the other one? Euro yen, not pound yen. Right. Okay, let's change that. Euro yen becomes or replaces pound yen. So again, I've got to get some context. And again, we look to be overbought here at the moment on that chart. Where's our resistance area? We're bang on it, really, aren't we?
It's a bit of a mess, this one.
It is, isn't it?
Yeah, I mean, monthly looks a bit cleaner, but you'd still,
on the monthly.
Yeah, the monthly does look a little bit cleaner. The 126.70 level looks like the area that is of most interest in my opinion. Yeah, and that would lead us right back down to that trend line. That would be interesting to look for some upside in that area. Does it just continue to push higher here without testing that level? I'm not so sure. Would you want to trade it down to that level? I don't think I would. It's tricky, isn't it? You're right. It's looking a bit overbought, but the daily is kind of showing another symmetrical triangle by the looks of things.
I'll put it this way: I wouldn't be going long here at the moment. But what I would be interested in, and you're interested in 4 and the 1 hour, so I get where you're coming from there. I don't think the 4 is available for me. Let's put the structure in. We're probably here and maybe here. So last bounce was off the top. We're looking for a lower high to trade short down to the bottom of the range. Had a bounce off the weekly pivot, so that looks okay to me. I'd be willing to go short here, but I'd need to see the right candle to do so. Or once again, exactly the same applies. If we put this trend line through here, we can't because it's been broken. We'll bring it down. So let's say that's through there. Again, I'd like to see it come out the top again, get back inside, retest the top and the trend line confluence. Then I can trade it short. There's not a lot of reward here though. So your candle's going to have to be pretty small on a 4-hour chart. Hourly, if we apply the same principle and call this the range, then we have come off the bottom. Sorry, we have come off the top. We've got a bounce. We've got a lower high, but gee, it's a mess. It's a real mess. That candle there was probably tradable and you probably would have lost on it. So I don't know that it's terribly reliable in the first instance, but I think I'd like to see a break again, Gire, and come back underneath. As I said, I think it's a bit of a mess.
Yeah, I think it's. And do you know what? The thing with it as well, I mean, there's a trend line from the 2nd of March, isn't there? Which looks like the lower end of that as that one down there, yeah. And it's pretty good.
It's pretty tight, isn't it?
Yeah, that's and I think that's the thing, you know, when you're looking at those two trend lines, from what I can see, are the cleanest areas on the charts. You know, okay, that the price action is tipped just a little bit above the higher end of that level, and it's tipped a little bit below the lower end of the level. But everything in between looks very messy. You know, and I wouldn't want to focus on the bars in between, and I wouldn't want to trade in between for that very reason, because it seems to have a little bit of confusion about which way it's going to go. But at those lower ends of the range, then you know it becomes to you know, from what I can see, it becomes a little bit clearer. So trading off the lines makes a lot more sense. So I think maybe a bit of patience might be wise. I could understand a case for the downside, because you know you would think that it would test the monthly levels. I could certainly make a case for the downside, but the trend is up, and you could be fighting quite a while. You know, how long is it going to take before this breaks down? The safest way to trade it low is under the weekly pivot, from what I can see. The and if it comes down to that lower line, then you might have a margin of safety to go long from there. But from here, it really could go either way. From what you know, this just looks like a bit of a mess. It's got nothing decisive about it at all.
Agreed. And you know, look at that chart there. That's really telling you everything you need to know. You know, that's a daily chart, and every candle's got a tail on it that's big, and some of them are high, some of them are low. It really is in a land of no. Well, my old mentor used to say that, the land of nobody.
Yeah, well, this is and I suppose the takeaway, Jira, is that even if you're trading off 1 hour and 4 hour, the analysis has to be done on the larger timeframes, because you need to know where it could get to on the wider timeframes. You know, where's it really going? Where is this product's really going? Is it going up? Is it going down? I mean, it's definitely going up if you look at the monthly. But as Jeff says, it's looking a little bit toppy at this stage, and it could pull back first before going higher. I trade up on both Monday, making profit at the moment, but thinking of closing both. Oh, okay, because it seems both are going nowhere. Well, that is going to depend on your initial target. You know, where did you set your target? How far away from your target is it? If you didn't have a target in the first place, then you know, maybe it might be wise to either find one now, and if you can't find one, then yes, absolutely close it down, because it sounds like a lack of potentially lack of clarity, and it might be wise just to kind of recalibrate what you're doing. But find a target, you know, but if it's nowhere near your, but if it hasn't got to your target yet, and you did your analysis and said, you know, that's where I think it's going to go, then it's much better practice to lose the trade and trade the method than it is to you know, to continue to close trades down and not trade the method. So whatever your target was, mate, needs to be established, and then you should know what you're doing. Because the thing with it is that if you sit here and analyze hourly and 4 hour bars and 4 hour charts, then you start getting carried away with the emotion. Whereas if you've done your analysis and you've said, right, that's where I think it's going on, you know, for whatever reason, on an hourly or a 4 hourly, that's absolutely fine. Then if you're finding it difficult to watch the price action, close everything down and walk away, and just, you know, leave your targets do their job, because your analysis should have been done. Okay, great. So you've got a target. So your analysis was 130, 132.97, 132.97. Okay, goodness me. Wow. Okay. And you're trading that off an hourly chart? Not knowing your methodology, mate, I don't know why you've come up with that number, H4. Yeah,
Yeah,
put that in for
I'll
us,
go there
Jeff.
and tick.
Yeah.
To me, it depends now on where your stop is, Jure, because this is due to pull back. I've got no question there that this is due to pull back, but I've also got every reason to think that it's going to here, even above your target. So to me, it depends on where your stop loss is.
But now we're on monthly charts, and you know, you've basically flipped from analyzing a 4 hour to not you, but Jira, we're now flipping to kind of getting targets on a monthly chart. Now, if you're trading on a monthly chart, it would make much more sense to my mind. Your stop loss at 128.75.
128.75.
Sorry, 128.15. Goodness me.
So you're here. So you've got protection of the monthly pivot, this swing high here. So that makes sense. I totally get that. But if you switch to the bigger time frame, it may not make sense, 128.15, because you can see the breakout level here, right? You've got every reason to think it's going to bounce off this trend line and come back to that level.
Yeah.
In my opinion.
Yeah, agreed.
So therefore, I would say the bigger picture is fighting against you at the moment. So I totally get where you're coming from. Are you not happy to just leave your stop loss where it is? I assume you're in profit if it hits your stop loss. Are you not happy to let it run? You're thinking, okay, this is going to reverse, so I want to maximize my profits. There's nothing wrong with that. Absolutely nothing wrong with it. I think it's a sound philosophy. You can't go broke banking.
No, I mean, is your stop loss in profit, Jira? If it was to hit your stop loss, would you end up with a profit?
Okay, so you haven't taken any profit and you haven't moved your stop loss. Right. So you're still at risk in the trade, having got, I'm assuming, I don't know where your entry was.
What was the entry price, Jira? What was the entry price, mate? I 128.86.
Okay, so you're just in profit. You're in profit 30 pips versus a 70 pip stop loss.
Okay.
Yeah, look, it's your trade, but if it's me, I want to get safe in the market now because it is possible that this will retrace off that big trend line, right? It's almost hit that trend line. It's possible this will retrace now. It's not certain, but it's definitely, it would be within my thought process. So I would make myself safe. And there's a few ways to do that, of course. If you're on a 4 hour chart, you could take your 30 pips of profit and move your stop loss 30 pips from entry, which would get you 56. Get your stop loss there. It's under the weekly pivot. It's under last week's weekly pivot. It's not under a swing or a trend line. Oh, there is a short trend line up there. You could do that. You could close the trade and take the profit, absolutely. Or you could close 75% of the trade and move your stop loss maybe up to here. If you're afraid of it coming down, you're going to make some money no matter what there. Or you can leave your stop loss where it is and take 75% off the table as well. Up to you. That's a very personal thing, but there's many ways to go about it.
Yeah, I mean, I'm still trying to work out. Okay, 128.86. Yeah, I think that's fair enough. I think that's fair, just under the weekly pivot, because there's a trend line there as well. If it breaks the weekly pivot significantly, It's probably going down, stop loss at 128. Sorry, about 128.70 makes the most sense to give you some room for the
and
trade.
If it bounces off the weekly pivot, then as it's done and goes,
you're still in.
Good. You're still good.
Yeah, that's the way I'd want to do it. I'd want to leave the trade on the table to kind of get it. I'm a little bit confused about the strategy, if I'm honest, mate. I'd need to know where you got your numbers from. Why enter there with a target of where you got it? Because it seems elevated to me. And it looks like you might be flipping time frames. And if you were entering this off a monthly support level with a 4-hourly or hourly setup, and then looking for that next monthly resistance level, that would make sense to me. But I'm still confused of why, and I'm only confused because we haven't gone into the detail. There might be some complete this trade might have complete clarity, but I'm a little bit confused about how you've generated those numbers of the entry and the target. It just seems quite lofty, and it probably doesn't need to be. And actually this may be sort of, and the reason I think it might be worth looking into, and I don't know whether maybe at some point you want to come on mic. I know we got Ainsley coming up soon. I don't know if she's in yet, but I don't know if you want to come on mic. Ainsley is in. If you want to come on mic, maybe sometime next week and talk us through how you do this, then maybe Jeff and I could give you a bit of a coaching session on it, because you may need just a little bit of tweaking with your targets and things. You might not. I mean, if you're profitable, month over month, then by all means, politely tell Jeff and I, yeah,
something like that.
That's not polite, Ainsley.
It's direct, honey. It's direct. I'm Australian. You forget that.
I know, but I used the word polite. I said politely.
Hello, everyone.
How you doing, Ainsley?
I'm well. Sorry, you'll have to excuse me. I've been for a run, so I'm just fed the kids, been for a run, and life's good.
Oh yeah. If you go for a run, life tends to be pretty good, I think. If
much better. But I'm listening and I can hear it. And I've got to say, Gerard, one of the biggest things I stuffed up on early on was flipping time frames, and I did it all the time. And I did these fabulous targets with a stop loss that was suitable for a 1-hour trade. And I did it. I guess we all did it at that stage. But one of the things was you've got to give the trade room to breathe. And as long as you're giving it room to breathe, then that's okay. But at the end of the day, our biggest concern is capital preservation. So as soon as you put a trade on, you're risking capital. To lock that in and have it a profit-free trade is a good thing. That's capital preservation. You don't lose money banking profits, even if they're small. And small fish are sweet, and we all know that. But I have a personal vendetta about feeding a broker. So I'm always looking for a good trade setup. So just when you're going into something like that, and as we've seen on the chart, that euro yen trade is really getting very busy. It's a lot of static. There's a lot of noise there.
Fake TP1 guys on pound.
Yay.
We need an audience clapping sound, really, don't we, Jeff?
We are something like that.
Ainsley and I will do it. Yeah.
Good. Jolly good.
Yeah.
Well, that's good timing.
Excellent timing. Does that just shut me up, Jeff? I get that.
No. That gives you a chance to speak as much as you want, eh? Oh, hang on a sec. I just got to check two things, because I'm returning to my old roots.
Okay.
You keep your mind above the gutter there.
For God's sake, did you really say that?
Yep.
Join us every day, Ainsley. That's some of the cleanest things that I said.
I'm also looking.
But I'm Australian, right?
Yeah.
Euro Aussie's also looking okay to me.
Okay, Jeffy, could you go back to that pound trade, please?
Yep,
Because one of the things I've been doing I've been doing a huge amount of research actually.
You know what? Interesting, you're talking about the pound. The pound at the monthly pivot looks like a potential short to me.
Yeah, I know. Do you know what's really interesting? I keep looking at it because I'm having this little heart attack. So I went in. If you go up to I don't know, is that what are you on? Alley. God, get off an alley. Can you go to a
Water at the
four
moment,
alley?
but that'll change in an hour or so.
Sorry, please finish your trade. But one of the things I came across after doing a 5, 10, 15, and 21 year research on a seasonal chart on the pound, on the 9th of March, there was a long.
Oh, okay.
Oh, that's interesting.
Post-election, so post-election 2021, on a long on it. And I took it, I got clipped out, and I'm back in it again. And I looked at the chart and I sent a text to Jules and I said, I think I'm mad, I'm going along here. And he said, go for it.
Well, do you know, mate, I don't know whether you're mad, because I don't think the fundamentals necessarily disagree with you, but it just, technically speaking, it looks like a short to me from the monthly pivot. I mean,
I know, and that's the thing. You look at the chart, you go, nah, that's a short. But I went long. I actually decided that some of the stuff I hadn't been doing. Over the last February, I had a bit of a, to be quite honest, iron issue and blood count issue and fog brain or brain fog, as we call it in Australia, because we're on the southern hemisphere. And I wasn't trading a lot at all because I just struggled. And I've noticed when your brain doesn't work, don't trade. Not a good idea. So yeah, I went with some of the research I had done over the last couple of weeks, and it is really strongly seasonal. The other one I looked at and had a small little heart attack was the S&P yesterday, and that was some research over 71 years. So and I don't want to put it out there because I haven't tested any of these theories at this stage. So, but it's just interesting to see where it goes and how it's spinning. But you know, the pound, okay, let's see how it goes. Oil.
Yeah, oil and gold, Ainsley, we're really interested in here.
Yeah, so oil, we discussed on Sunday night. I said it closed right on the monthly R1 level. However, we had a little bit of a push up due to a small bombing issue in Saudi Arabia on an oil port. And all of a sudden on Monday morning, it just went bing. There was a gap. So there's a retracement, guys, that we were talking about on Sunday night. After a little bit of a push up, it got to $68 and then just had this massive retracement straight back down again. But we were expecting the retracement. We just didn't expect the bombing of the oil port. So I wish they would do this between Monday and Thursday. I know Friday, Saturday is their weekend, but I would really, really appreciate if they'd got a bomb or do these kind of things it's between normal commercial hours and we can actually take advantage of it.
So what did the bombing caused some downside? Is that what we're saying here?
Yes. No, it caused the upside. Hello.
I was going to say, yeah.
It goes bang. Hello.
Yeah, that's
I said that my eldest one came home from school and she said, "So, Mum, how was your day?" And I said, "Oh, there was a bombing of an oil port." And she goes, "Yes. Did you make any money?" I'm like, we've really got to just tone that down. We don't want to have bombing of oil ports, but you know, they see it as payday. That's all right. That's cool.
Well, as long as there's nobody got hurt, it's
nobody got hurt, but it was
historically tradable.
Supply and demand. Okay, so we're coming back down to supply and demand. So we've got that.
Hang on, stop. Time out. This is historically tradable because every time they bomb something, the market goes apeshit for 5 minutes, and then it goes exactly where it was going anyway.
Exactly. So I was right the first time. I just didn't factor. They didn't send me a memo, Jeff. I'm very upset. I didn't get the memo about the bombing of the port until I read about it.
Well, you've been around all that long. You should now be on the VIP list, shouldn't you?
I should be on alert on my phone. Port bombed. Go long for 5 minutes.
Well, this is the thing. I mean,
and then
where we're at now, where we are now, Ainsley, are you still interested in going long on oil? I mean, it
at the moment, I just need to see a little bit more because there's a bit more of a shake-up. The report on the analytical side of things is that oil has had this monumental splurge, this monumental rally. And whilst we hit 68 and Brent's gone to over $70, there's a lot of, okay, we've gone up really, really quickly over a really short period of time. Just cool your feet for a bit. So the big news last week, obviously, was the Saudis and the OPEC plus countries deciding to not increase those restrictions. So they've stayed with restrictions. There was the week before that, and there was a bit of a pullback when the Saudis said, oh, there's 4 major Texan oil companies offline, and that was restricting the supply. And because of the big freeze and the maintenance issues and damage to all the equipment, so that pulled it back, and the Saudis said, oh, we'll lift our restrictions and perhaps we will be able to, you know, help the US out. But a little bit of rationale has been applied and a bit of sensibility with don't flood the market, because as soon as the Saudis lift their restrictions, it's sort of like a green light for everyone to lift the restrictions. So Kazakhstan and Russia have been allowed to lift their levels because it's a seasonal thing, but the rest of the other OPEC and OPEC plus countries have kept a lid on what they're doing to supply. So they're playing ball. You look at that rise from sort of like January. You're on a monthly chart? No, you're on a weekly. So even from end of January, the rise on oil has been quite steep. And they're just saying, okay, let's just take a breather. We've talked about it and we're all really excited about the fact that COVID appears to be under control. We're talking about perception and reality. The reality and the perception aren't quite there yet because, you know, like us in Australia, we're still, they've only vaccinated like 100,000 people. So as keen as a lot of the airlines are to get on, and as soon as those airlines are flying again, Ash, that means that it all opens up and it's on.
Well,
and
do you know
it
what?
looks a lot better.
Airlines can't afford not to.
They're in a really tight part. They're really pushing. They are pushing.
Well, do you know,
so
I happen to know from an inside source that if they don't start flying by June, it's over.
Yes,
yeah, it's over.
So our borders closed 17th of March 12 months ago, and they pushed that back to the 17th of June. And Qantas have opened bookings. They initially did the 1st of July, and they've now booked that back to the 27th of October. So that whole, considering Australia is pretty much ahead of the curve as far as getting things done and getting the vaccines and getting people back in the air again, that should give you a bit of a timeline. But that I use that as a bit more of a reality benchmark, because the thing is, they open the international borders, but nobody wants to go anywhere. Nobody wants to go to Europe. Nobody wants to go to the US. Nobody wants to go anywhere.
Well, do you know, it's interesting you say that. I was watching something yesterday, and somebody was actually saying pretty much that very same thing. There might be restaurants might open, just as an example. You know, the industries may well open, but whether people are going to want to interact with that business is another question, and many people won't. You know, many people are still concerned. I think when it comes down to flying, it could be different. You know, when it comes down to flying, because. Well, actually, I don't really have a because, but it might.
Because Qantas has said no jab, no flying. That's as far as Qantas is concerned. You don't, if you don't have a vaccine, you don't fly.
Yeah.
You know, for me.
But again, even if you have, Ainsley, you said it. Does anybody really want to go there?
That's exactly it. You don't want to go the other place. And whilst we open our international borders, the big thing today was they want the university students back here. They want people who have you know, their manufacturing businesses are overseas, and they've got to get over and deal with staff and manufacturing and things like that. Those are the people. We're not, and you know, Australians generally. We love to get on a plane and go somewhere, but nobody's got any. Yeah, for us, the big thing is opening Fiji. So all I can say is probably 95% of Sydney will end up in Fiji for the school holidays in July, and it's just like, you're probably better off at home anyway. You know, you won't bump into anybody, you know. So,
and if you go to one of those resorts, it's the same as being here anyway, frankly. And we've got better beaches and a better climate.
We've got better, exactly. It doesn't cost you an absolute fortune. But the Australian government knows that they have to vaccinate the Pacific Islands before they allow Australians to go there for holidays. So it's just that vicious circle, and it's logistics and getting it done and pumped out. The big thing for us, though, actually, is we don't have to worry for too much longer about our vials being stopped by the EU to come out here, because CSL, which is a Melbourne manufacturer, will start manufacturing the AstraZeneca vaccine at 1 million doses a day on the 22nd of March.
Right,
So
that's good.
Yeah, we're good. You know, they said Italy blocked. It was Italy who blocked the 250,000 vials coming out to Australia, and they said they don't need it. And they're dead bloody right, because we've had 51 days of no local contamination with we're good. You know,
I think you're right. A lot more was made out of that story than was probably necessary.
Read the rest of the article. It just said that Italy had a hissy fit and France was going to get on board. But when you read it and you realise they actually do need it more than us. We don't have any locally transmitted cases. We haven't had for 51 days. In total, Australia has had to date, from when the pandemic started, 909 deaths.
Amazing.
That's it.
Yeah.
That's it. And I know New Zealand is a lot less, but hey, let's face it, they are a country with a population of 5 million people. Which you
kind of want to know these statistics per capita, don't you, rather than the amount of people. Yeah. So we made a case for oil potentially easing off a little bit here, particularly if the airlines don't come back.
Which it's done. Has done. I'm watching it closely now, and I said this on Sunday night. I said, you know, it's hit R1 on a monthly, which is always a strong level. It's also hit, as you point, as we've got here on the screen, you know, bang, straight into a level of resistance. Coming back down, I will probably wait until it perception and reality meet a little more, and look for another long.
So what about gold, Ainsley? What about gold?
Oh my God!
You know, what are you looking at with gold? I mean, we've looked at oil, and we know that we should be looking at OPEC quite regularly. What metrics should we be looking at with gold to make a decision on it? I mean, levels.
Okay, so the thing, which levels? All right.
Not the levels.
1717, 1720, 1725, 1732. They are the next levels going up. What we are looking at, there is the US CPI coming out tonight, but more importantly, ahead of that is the $1.9 trillion stimulus package that has been approved by the Senate. It's back to the House of Reps and looking for approval before it gets signed off on Biden's desk. So that's what we're looking for. There was a 2% rally. It got down to a fairly reasonably low level, and I was watching it, and look, if you look on a daily if you just open that up a little bit more, you'll see that yesterday there was a 2% rally on gold. And so look at that. That was a pretty strong bullish engulfing candle yesterday. Now it's come up and it's gone bang, smack bang into, there's a level that it's hit there. Excuse me. And it's having a little bit, but it's not, you couldn't say today is having a major retracement by any stretch of the imagination, could you? You just say, look at it, it's just sort of like floating around and just hovering. And I think,
I'm interested in your opinion on what the $1.9 trillion does for gold and why.
Traditionally, what it should do is.
And isn't it priced in?
Sorry?
And isn't it priced in as a further?
Yeah, that's my other thing. Is it already priced in, or is it people are going, hallelujah, it's actually here and it's done, and now we're good to go again and back to being a safe haven? Or are those stimulus checks going to go to crypto or into the equity market somehow? I was talking to Gordon ages ago about this. So when Gordon Scott, and when the first round of checks came out, was it end of last year? He was saying that they tracked the checks. most of them went straight into the stock market. People bought shares with them. So he was actually, because Gordon's right across all of this information anyway. So he had all the stats on that. And he said $1.9 trillion. He said, chances are, more than most likely, it is going to go in there. But there is that whole safe haven thing that gold is looking cheap now. Gold is not up at 2,100. It isn't up at 2,000 anymore. Jules and I, that was my dog, thank you very much. Jules and I were talking about this yesterday, and we sort of had 1650. We kept going on this drift. So, and I call it a drift because it goes up, it goes down, it goes up, and then comes down a little bit more on a 4 hour. It's just, goes up 3, comes down 3. So,
in your opinion as well, Ainsley, the correlation with gold and inflation is you can't argue it. So, in your opinion, are we looking for a deflationary environment and then hyperinflation? Are we looking to go straight into inflation? I mean, I know the CPI numbers are going to be important, but
they're important. They'll make an impact. So and
is that where we're at for you? I mean, if
something's got to move it. Yeah.
Do you think we're going to get inflation, or do you think that there's a case to be made that we're going to get sort of quite a lot of deflation first, and therefore we're going to see gold actually lower?
I'm sick of gold lower, to be quite honest. Not like
you think gold lower, do you?
Hurry up and I would like it to go higher, to be honest. It's so there we go. Look at that. It's come down, kicked up the traces, hit that level. I think that's 1670. I can't see. Is that 1671?
Yep.
Okay. So that's a level. 1671 is a level. And then it's bounced off that. So whether it goes up and it reacts, how it reacts to the CPI and this bench of the House of Reps pass it approving, because it's come back, approving it all. Let's see. And Jeff, you're right. There's that argument that the whole inflationary impact on gold has already been priced in. CPI hasn't. Well, I don't know. And it's just one of those things. Whilst it's hit for me a certain particular level, and we've got these two major things coming in, like the CPI and the stimulus package. Who knows? Is the money going to go somewhere else? But I don't know, because you look at Bitcoin this afternoon, and and Bitcoin's dropped as well. So hang in there. I haven't got a direction. I've got a bullish engulfing candle from yesterday. We had a 2% rally yesterday. We've got major news coming out today that we've been waiting for some time.
Yeah.
Does that take us to the top side of that channel? Does it take us up to those 17, 17, 1720 levels, 1725 and 1732 levels? Does it take us there? Or does it just take us straight down to 1655? Don't know. We've got to wait.
So you're not buying just yet. You're waiting for further confirmation, are you?
Yeah.
So what are you waiting for, eh?
Let's go tonight. We've got these things coming out today. Those things are happening today. The US CPI and the House of Reps are voting on the stimulus package today as well, Wednesday.
Okay, so if that drove gold to where are we now?
3,000 is where I'm looking for. That would be really good.
But if it drove it now to the previous breakout level, let's say it drove it to, let's say the news drives it to there, right? 1762. What do? Do you wait till it pulls back off it, or do you buy it?
No, I'd be in before then. You know that.
No. But you just said you're waiting for the news.
Waiting for that news, because it could actually send it lower, or it could send it back up to, and you know, by the time it got to the top end of that channel, it would be up at that level, which is that level of resistance.
Yeah, but say the news drives it to here. You're not going to trade it before the news, right?
No.
Right. So the news drives it to here.
Yeah.
Do you wait for it to pull back off there, or do you
pull back and then and gold loves levels? It really does. So the level it breaks, it will, and you won't necessarily see this on a daily chart, but you will see it on a 4-hourly chart. So if it breaks a level, it will come back, test it, and then take off again.
Okay, perfect.
I see. So the idea really is to wait for the news. If the news is is perceived in your favor, you're going to wait for the jump to the upside, pull back, and then we're going to enter.
Yeah.
Gotcha.
Yeah, and that's with most. But gold.
Did I ask that question the wrong way? I must have. I'm sorry.
No, you didn't, Jeff. I think you know we got there in the end. I don't think you did ask it in the wrong way. I think it was just maybe not both understanding exactly what we're waiting for. Yeah. Waiting for the news. Okay. Yeah.
I'm waiting for that news because there's pretty big news. It's CPI and a huge stimulus because that's going to affect a lot of things.
Okay, so let's talk about the news then, Ainsley. So let's say the news is tepid. Let's say it doesn't really give us anything negative or positive.
What do you mean?
Well, let's say it comes in. So really, for CPIs to be just so everybody's aware, what we're looking for with CPIs is for a jump to the upside. So core CPI and CPI month on month, currently forecast at 0.4, the previous at 0.3. What level are we looking for to say this is a trigger to buy gold? 0.5?
0.5. Anything out of the norm is going to push it.
Okay.
And it's an exponential correlation there.
Yeah.
Actually, do you know what? When I was doing some research, the correlation, the other thing with gold, and what did I normally do was, if you have a look at a dollar yen chart.
Dollar yen, I'll have here somewhere. Very unfavourite currency.
I was thinking the dollar yen gold correlation had broken down. No, hadn't.
You want me
to be clever and
compare them? Is that what you want me to do?
Oh, look at it. It's the same. It's completely and highly correlated is dollar yen and gold. Look at them. And they both reversed. They both reversed on the 6th of January on the same day. How's that? It's not until, and just, sometimes when you can't see the forest for the trees, I just wanted to highlight that because that's really an important correlation. I had thought that had broken down. I was just like, no, I was wrong.
So what we're looking for is when dollar yen goes long, gold goes long.
So dollar yen will go long and gold will short.
But on the I get it. Yeah.
So technically, if I'm going to be, the yen will strengthen when gold is going up.
So you got a reversal bar on both yesterday, right?
Yeah.
Which is where the correlation seems to be
well,
okay.
You go back 6th of January, you got correlation from the 6th of January to now between those two.
Yep.
By the way. So
just to kind of like dig a bit deeper into that. So the dollar seemed to reverse against just about everything yesterday. You know, the Aussie was also very, pretty positive. But what you're saying is over a longer period of time, the closest correlation that you found is between gold and the dollar yen. So we see the dollar yen. If the dollar yen weakens, then gold will tend to strengthen. That's the correlation we're looking for. Interesting. Yeah. Okay. I've never considered the dollar yen actually.
Yeah. And it's the same, like I said, they reversed on the same day, 6th of January.
Yeah.
And they have moved in sync fairly well. Obviously, dollar yen. And it's just like, how did I miss that? But I did. I missed it. Yeah.
There's a few out there, isn't there?
It's easy to understand, and sometimes you can't see the forest for the trees. But seriously, that's a major correlation. And normally in January for me, I'm looking for that move up. December, January, I'm looking for that move up in gold. And my counter trade is, which is where I can really stack it on as well, is dollar yen short.
Oh, okay.
Which is what I normally do. And it's Merry Christmas at maybe a month or two later, but I'm happy with that.
Yeah.
But I just didn't get the reversal this year.
Yeah.
I just didn't get it. But
so we got CPIs.
It's really important to keep abreast of those correlations because they
totally agree. So we got CPI. I mean, I always thought the dollar Swissy was the closest correlated, and I'm interested to hear you say about the dollar yen. So I'm going to have a look at.
No, dollar yen gold is probably the stronger one.
Okay. Yes, we got CPIs out at 130. So really, we're looking probably in the US session for a trade in gold potentially. So everybody watch out for that. And I guess what you're looking for is for what's that? Sorry.
Watch oil. I'm just watching oil at the moment. She's really bouncing at the moment on a 4-hourly chart. So whether it's liking some news that's coming out at the moment, just keep an eye on that as well.
Okay. So we're looking for really north of 0.5% and north, and the reason for that is that the CPI is telling us the consumer price index. So what we're looking for is what's the jump in prices for the buyer, just the everyday person going out into buying their goods. And if we're seeing the prices increase, then because gold tends to be a safe haven for wealth and for value, then if we see 0.5% and north, gold is likely to jump to the upside. If we see 0.3, how are we going to read that? We're just going to say, well, this isn't enough really for us to go and buy gold, certainly aggressively anyway. Anything?
The next thing to worry about, Ash, is how the market perceives and receives the information on the stimulus package.
Okay.
And my question subsequent to that would be, and Ash, I think that's where you're going, or maybe not.
Yeah.
If the market perceives that news to be, I'll call it on trend, because trend seems to be down at the moment, and gold is driven below 1,600. Below 60. What next? And Ainsley, you probably didn't watch it because you're probably ahead of these guys anyway, but I put a link to a debate between a couple of American financial guys, commentators.
And Dent?
Yes. Did you watch that?
Yeah. So Rickman is saying gold should go to $10,000, and he gave three.
Rickards,
that's it. Yes. He gave three very mechanical, technical assessments on how to do that, and I jotted those all down. So if anybody wants to know how that's happening, I can give that. And then Dent was on another, but my problem with Dent's assessment was he's moved the goalposts in the last month or so, before the debate, and he's gone from 750 to 800 to 800 to 1,000, and he's all over the shop. And it's just, and whilst he was very charismatic and very exuberant with his,
he's certainly exuberant.
He was. Rickards gave me stats, technical analysis. He gave me methodology. He gave me history.
He's very balanced, and he was advised.
He would set us all asleep, but they're the ones you watch.
He was an advisor to government.
Yeah.
I don't know how many years ago, but yeah, I've been aware of him for a long, long time.
As opposed to Dent, who is trying to set up a fund here. Now, I'm not cynical.
I thought the balance between the two of them was brilliant. I thought it was a fascinating debate, and actually, I did think that that Harry Dent was yes, he was exuberant and probably did change his stance in quite a few ways, but I did think he brought some pretty interesting evidence. It's one of those things with people like him is that because of his personality, sometimes it's difficult to see through all of the fireworks, but actually I thought that there were certain things he said. He did drop a few things that I thought were quite interesting, and one of the most interesting things I thought he did say was that regardless of whether he thinks it's coming to 1,000, he also thinks it's going higher. So they actually were both in agreement by the end of what's going to happen to gold. Ultimately, they both agree that gold is going higher. It's just whether we get deflation or inflation, and whether it comes down to 1,000 or whether it pops straight up to 3,000 or wherever it goes. Interesting as well today, Ainsley, crude oil inventories, and I think more importantly, the 10-year bond auction, 6 p.m. UK. So we're now looking at sort of like quite a few layers that could make this gold market quite interesting today. And I wonder whether that CPI data, if it does come in a bit hot, does drive the gold price up, but whether we might start to see that bond auction maybe taper it off a little bit. I think there's a lot, as you said, we got the stimulus package, we got CPIs, we got the Bank of Canada rate statement. Okay, that might not be anything huge, but I think that 10-year bond auction today also could be quite interesting. I think there's quite a lot today that might either get us into trouble or make us some money.
Yeah. So the thing is, if you want to be wild, ride it. If you want to be safe, just let it play out. And then don't ever think, oh, gee, if only I'd been in that trade, I would have made a mozza. We know it's coming into a slightly volatile, the next couple of hours or the next 12 hours are going to be quite volatile, and we know that.
Yeah.
So, be careful.
Yeah.
And it's all fine and well to say, oh, I wish I was in on that trade. But this trading gig is, it's like waiting for bus. The next trade opportunity is going to come along really soon.
Yeah.
Unless you live in Sydney. Sometimes buses just don't come.
Yeah.
Anyway.
You should try Tassie. No, they're on time every time. There's not many of them. Exactly, you're right.
But,
not near me. That's not a bad thing, really. I've got to say, I'm not terribly dismayed about that. So, thank you so much.
You're welcome. Oil and gold are going to give you a little bit of heartburn, I would imagine, over the next 12 to 24 hours. So hang in there.
Yeah. Okay, thank you very much, Ainsley. Yeah, that is good advice. So we know what we're looking out for. We know what we're watching now. It sounds like the name of the game is just to wait and see. VIX is pushing down. FTSE 100 is relatively stable, but things are quiet, I think, on the Western Front. I think the pound dollar is. I think it's a really interesting one. The pound dollar. I think the pound dollar for a technical short is interesting, but those CPI numbers are going to be dependent on everything dollar related today. And again, do you really want to trade this now? I'm not too sure, but I'm looking for a short off that monthly pivot. And I had an
Yeah,
order.
I had a look at that candle yesterday, mate.
Yeah.
That 4-hour bar, and I thought, yeah, that's probably worth a little bit of a shot.
Yeah.
And it probably was, but it's struggling at the moment, of course. But,
It is. Do you know, mate? I wonder whether
if you've taken some profit here, like I would.
Yes. I just wonder whether we almost play it the Ainsley way and wait for the news to pass and then see what happens. Because if the dollar strengthens, and this is the interesting thing, you might want to go long gold, in a scenario like this, but then you could possibly hedge out that position a little bit with a short in something like the pound, because the COT data and the seasonality on the pound are a bit grim, and we do have a setup for a short here, so. I think there's a way to play this market and keep yourself safe and potentially win out of both of them.
Yeah, look, I was sorry, you go.
I was just going to say, I know on the pound, you're running into a few moving averages there as well. So that's
what are they?
They offer up a bit of support.
Yeah.
Okay.
Sorry, resistance because we're long. Because we are.
Yeah.
So I know we're running into those, not only levels, looking in strong levels, but there's also the moving averages that are running right through that whole little area in there as well. So
so you've got to get through those. I mean, a break and a retest of the monthly pivot, you're probably away.
Yes,
but
you think
there's
so?
a bit of work to do yet.
Yeah,
depending on that
news. A bit of work to do yet.
Jeff, you just
sorry, Ash, I was just going to say that news will have impact.
Yeah, it will, won't it? So we're probably waiting until that news has happened. Jeff, have you seen that post from Jira?
I haven't, absolutely, mate. Yes, for sure.
Yeah, tomorrow we haven't got anybody in tomorrow, have we?
No, you've got a date, buddy. Absolutely.
All good. Great. Okay, yeah, come on in tomorrow, Jira, and we'll talk it through.
And LT, I think that's an awesome question. And I was listening to the radio whilst I was watering bamboo this afternoon, and I was thinking, Australia's now got $1 trillion worth of debt. Holy snap and duck shit. Where did that come from? And of course, it came from the pandemic.
Yep.
And LT, I think that's an awesome question. Can countries pay for the vaccine? Wow. I hadn't even considered that, to be honest. How do they pay for that? How much further does that plunge them into debt? And where does that line become so blurred that we can only pay for it in bottle tops or something? But
this is the thing, mate, isn't it? I mean, this is really where we come back to gold. If they want the debt to go away, as those guys were discussing on the debate, they do it in two ways, and one of them is to inflate it away. And every single country on the planet has got this crazy debt right now. So you would think that to inflate it away makes the most sense. They're not going to default, right? I mean, if one of them defaults, then they all default, and that would just be catastrophic. So,
and so we go on. I have to move to it. I seriously have to move to Antarctica. I'm not far away enough from the world.
So that's a hop, step, and jump, isn't it, Jeff?
Yeah, and it's melting, so I'll be okay.
You're a polar bear.
I'll be able to grow bamboo down there. All good.
I don't think there are any polar bears down there. I think it's all penguins, isn't it?
A lot of penguins.
They get eaten by the orcas. Orcas are massive.
So sea lions as well.
Yep, eat them too.
Oh wow, sure, that's amazing.
That is amazing.
Wow,
amazing. Awesome. Maybe tell us about that tomorrow instead. No polar bears. No, they're all in the Arctic, aren't they?
Happy feet free.
Lots of polar bears.
Yeah, plenty of penguins.
Well, there used to be. I hope they're still there. But my point is this: we've not been here before. This level of debt, this level of global debt, has never been addressed before. So I really don't know where it's going. I have absolutely no. And if inflation is the answer, then oh my God.
Everybody get their gold, right?
Yeah, absolutely.
Ainsley will be all right. We'll all be going over to see Ainsley instead. I think we'll come and
Or should he be flying us around in his private jet? One of the two, you know, who knows?
Swee saying BTC2. That's I think that's really interesting. Is Bitcoin an inflation hedge? I don't know yet. Do we know yet?
Oh, you know, I heard an interesting comment about gold being an inflationary hedge. Bitcoin is moving on the hope to be an inflationary hedge.
Yeah.
Two different things.
I mean, I hear such compelling cases for trashing Bitcoin, and then on the flip end, I hear such compelling cases for, you know, for saying it is, you know, the best invention since what do I quite like?
Slice bread.
Yeah.
That's the
say slice bread. Hills hoist, a lawnmower, a ventilator, even. Yeah.
So I don't know. I still don't know. I think that the thing with it, Swee, in my opinion, is that we know that gold is, but we still don't know. The jury's still out with Bitcoin. So I don't think we could make the case to say for sure whether BTC is a genuine hedge for inflation. It might be the best, you know, it might be even better than gold. But when the fear really kicks in, are people going to buy Bitcoin or are they going to go back to gold? I don't know.
Gold's been around for a hell of a long
time.
At the moment, we are looking at technology, and that's great, and moving forward, and we have electric cars, and we're looking at being able to do a cruise ship rotation in 2027 or something on a SpaceX cruise ship around Mars or whatever it is. That's great. That's all moving forward. But gold's been around for hundreds of years. We're not looking at any kind of restrictions as far as regulations go. You're talking about a financial asset that still isn't completely regulated. And then you've got countries like China that are trying to develop their own digital currency. And they've already introduced it into a couple of cities and are running with that. And it's just, are they going to do that to undermine the strength and the credibility of Bitcoin? Because Bitcoin's been able to get quite a bit of traction over the last couple of years. Is that another alternative, or is that something that, you know, Lagarde and Janet Yellen and the French finance minister have all alluded to? You know what, guys, perhaps we just introduce a regulation and pull the rug out from under you.
The thing is, though, you know, I suppose what makes something worth what it is that we say it's worth what it is. So if enough people, I mean, if enough people say that Bitcoin is worth $1 million, then it's worth $1 million. You know, it's not the use of it necessarily, or you know, there's not.
To a degree, it is, Ash. I'm not quite agreeing with you there, because it is used as a form of currency, but the currency that it's been used and by whom, it has been called into question, which is why it has its up and downs. And let's face it, there's a tweet from Elon Musk, and it will send it up 5%.
But it hasn't been used as currency, Ainsley. Well, what can you buy with Bitcoin yet? Can you buy anything with Bitcoin yet? I don't think you can you?
Are you serious, Ash?
But you have to convert it over, right? You can't just go directly and
Bitcoin,
buy
arms dealers, drug dealers, the dark web. Anybody who doesn't want to have anything traced has been dealing in Bitcoin.
Okay, so
we're talking bread and butter, you know.
I'm talking bread. Exactly, I'm talking bread and butter and milk, and you know, in the supermarket.
PayPal won't take it. I saw the CEO of PayPal being interviewed on this one the other day, and they said because of the volatility, you can't have it as a default currency. You can't have it because, you know, 1 minute it could be buying you a pizza, and the next minute you've just paid the price of a car for a pizza. You can't do it.
Well, that's what I'm saying. That's what I'm saying. So as yet, it isn't really you can't. Can we call it a form of currency? Okay, apart from the dark web, but you know,
I'm talking and the dodgy guys,
brothers. Yeah, the dodgy guys. But apart from those guys, I mean, we haven't got. I mean, maybe I'm wrong, but I didn't think you could actually buy everyday goods with Bitcoin.
You can't buy an ice cream with it. Well, you wouldn't want to buy an ice cream. It's very expensive ice cream.
Yeah. Well, yeah. I know there's always those stories of the people that, yeah, when they first bought Bitcoin and they basically used their Bitcoin to buy a pizza, are kicking themselves now that they could buy a house or, something like that. The inflated
Also
prices
true.
is crazy.
Oh, that's right.
Nobody wants to spend it. They want to keep it.
Yeah, because
Yeah,
it's
that is true. Yep.
That's
Yep.
right. So
Yep.
it's not as clear cut, is what I'm saying. It could go one way or the other. It could go to 100,000 by the end of the year or by July or whatever. Or it could, with government regulations who are not receiving any taxation, cannot control it or regulate it, and have got this this sub asset or this sub currency that they have no control over, they might just put a bit of a spanner in the works. Who knows? But at the moment, as it says, supply and demand and speculation on its value is what's pushing it along at the moment.
Yeah. Yeah, I'm finding it's a difficult one. Do you know what? I mean, I've given up guessing with it. I want it in the portfolio. I'm not prepared to pay the price that it's at, and if I miss it, I miss it. But I do want it in the portfolio because I can't make a judgment call on Bitcoin. I find it very, very difficult.
You've got gold in there.
I've got gold in there. Yes, yeah.
There you go.
But do you know why though, Ainsley?
Mums and dads, investors.
No, it's not that. The reason I got gold is that the price was right. The price of gold has come down to make it attractive, but Bitcoin is too inflated. So until Bitcoin comes down, I'm not buying. But I will do if it comes down and hits
to 15 to 12.
Oh God, I'll definitely buy a load there. Yeah. No, I'll be buying anything from 40 probably. But
can we actually hear what we're saying here? We're buying something.
We've got to go, guys. We've got Angel just letting us know the next show, bar by bar, is in 10 minutes, so we've got to get out of here.
Sorry, we got carried away, guys. I hope you got something out of the gold and the oil anyway.
That's no problem.
Yeah, we could be here until next week talking about this stuff.
We'll still be talking about gold tomorrow, I'm sure. But
yeah, we will.
We will. Yeah, definitely be talking.
Bloody boring subject.
Okay.
Thanks so much, Ainsley. Always a pleasure, mate. Always enjoyable. Lots of fun. Jira will be in with you tomorrow. You will be our guest for the day, and we'll analyze some stuff with you. Jeff, I will see you tomorrow, buddy.
All right, buddy. Very quickly, you know where our TP2 is on pound. We haven't triggered on pound Aussie. That's still waiting to go. Mate, I've lost my touch, or maybe it was just talking too long. There was a slingshot classic trade on euro dollar.
Oh no! Okay, well let's talk about that tomorrow, mate. Before we get in big
absolutely
trouble.
I'll leave now.
That's how I actually earn my stripes.
Let's talk about it tomorrow, mate. Before we get,
I'm absolutely stunned.
Let's talk about it tomorrow.
Let's get out of here. What do I say? Have a good one, guys. Bye for now.